Okay, what's going on, guys? So, I just good morning, everybody. It is 9:02 a.m. New York time on October 21st. So I just hit live about a second ago, but could you hear me before? Um, did you just start hearing me 5 seconds ago, or did you hear me for the last 20 to 30 seconds? It might have actually been shorter than 30 seconds. Might have been more like 15 to 20. So I'm just trying to figure out when I go live. It's when I hit start the stream on OBS, because it used to be that if I just hit start the stream on OBS, that it went live right away. So I just want to double check. He says yes. What's going on, mute? Just now. Okay, so I guess I do have to wait for the go live button to go blue, which is odd because I feel like that changed. I feel like that changed like a week ago. Music was still on. Oh my god. So what's going on, guys? Yeah, yesterday was really funny, right? I guess I'll give everyone a second to get settled in, get acclimated. I'm not going to do that again. I thought that I was being all cool, playing Led Zeppelin in the background, and then not only did I not realize that it was still playing, okay, but then the video got removed, right? So the video got removed. I didn't think that that would happen. I've had before. I've had videos where there's been like a clip. I did a YouTube video a while back, and I don't do a whole lot of editing. I don't know how to edit. I'm not like a YouTube marketer aficionado or have any skill in that area. But I thought I was being cool. I added a couple scenes from the movie Casino into a clip. Casino and Wall Street. And that took forever, man. Honestly, I don't care to do that. So if you guys are looking for anything flashy like that, I understand how that sort of breaks the flow and keeps things, I guess, interesting. But that's not what we're trying to do here. I mean, I don't mean we're not trying to keep things interesting, but we're not going to try to, put on a show that is trying to make up for maybe, I guess, a lack of content or substance in the content that we're trying to convey and we're trying to go over and hopefully help you guys lose less money. That's really the only goal with this YouTube is to be a source of unbiased and let's say non-sensational crypto market analysis, because I think that YouTube is really lacking that. There are a few YouTubes that are definitely worth following along. And guess what? They're pretty new as well, right? There have been sort of these YouTube incumbents for a long time now, and they have the ridiculous thumbnails and imagine if I had my face on a thumbnail of every video. I was like, is Bitcoin going to crash this week? And my face is like I would never do that. So so if you follow myself and Josh Rager, for a while now, you know how we roll and how we operate. There are a few other great YouTubes as well, so I don't want to take anything away from the ones that are out there. I know Crypto Cred and Don Alt have I think they have a similar approach in that it's no bullshit. It's just cut to the meat, trim the fat, and get right down to the stuff that I think is really important. So that's what we're hopefully going to do with this YouTube is not only do sort of like live updates of what's going on in the market, but also I like to say help you lose less money, because make no mistake, I think that trading is oversimplified a lot of the times. Even though as you progress and you improve, you'll realize that a lot of the skill comes in applying the things that might be seen as overly simplistic, but it's just a matter of applying them in a very disciplined and consistent manner. But I don't want to ever oversimplify it because obviously the attrition rate speaks to the difficulty of this pursuit. But I think that doesn't mean that we can't help you in any way lose less money, which is a great place to start. Lose less money, right? We're not saying that you're gonna 2x your account or 10x your account. Hopefully, this is the first crypto and coffee live stream. I thought that was a catchy little title. And I'm going to do these 3 days a week. And I chose the morning because I don't want to take away from any of the other players in the space, any of the other, like I said, great sources of knowledge in the space. I don't want to try to compete with anyone for a time bracket. I like the mornings. I wake up very early. And I feel like this would be a good time to get on. And for those of you that still drive to work, maybe you could throw us on the YouTube on the way to work. And yeah, we'll kind of just shoot the breeze, go over what's going on in markets, and we'll have the market open New York market open in 23 minutes as far as equities go. And then what I'm going to do is open up a separate account that'll just be for the YouTube, and we'll deposit a few Bitcoin in that, and we'll take trades as they present themselves, because the balancing act with producing content is it's, I right now I don't have to be present because I actually was in a no trade zone. This was about I want to say like 12 15 hours ago was a no trade zone for me, and last night I took a trade, got out, and right now I'm not in any trades. So this fits right now, but there are going to be times when there's a conflict, because as you can imagine, I want to be in the market as much as possible, and I have to be able to take my swings when I get a chance. So what we'll do is we'll integrate some form of a trading account onto the YouTubes just in case, and it'd be good to really show you the process. And for those of the Blockroots members that are part of Blockroots and are listening right now, they'll tell you that when I'm in a live stream, once I see the trade, I'm literally just in it right away. I can't do I'm not going to go over the whole thing right away maybe and say why I'm getting in, because a lot of times when I see something pop up, I'm going to get into the trade before I go over sort of what the thought process was, because as you can imagine, time is of the essence a lot. Okay, so we're going to try to do a lot of interesting things on this coffee and crypto live stream. Again, Monday, Wednesday, and Friday at 9 a.m. Eastern Standard Time. It's 13 UTC. Before we get started, I just want to say hi to everybody. Hopefully I look presentable. It's the morning. My hair is wet from a shower, pulled back. I do have long hair now. It's completely something that is totally new to me. My wife, I don't know if she likes it, but I am my own man. Okay, let's say hi to everybody. X Factor. Okay, is that on your birth certificate? Stan, what's going on, buddy? Arian, Tom, Matthias, Vidwin, what's going on? Howdy, Mute, what's going on, buddy? Okay, K-Geld, you've been following me for a while. If you could pronounce your name or write your name in a phonetic manner that I could easily pronounce so I don't massacre it whenever I say it, because I feel like I'm going to be saying hi to you a lot, because we are you and I go back on Twitter now. I feel like you've been following me for a while. And Benjamin, what's going on? Alexander, Brendan, Ahmad, D Ross, how you doing, buddy? D Ross. Okay, so we're going to be giving away $100 in Bitcoin during this stream. These streams are not going to be 2 hours long, probably be an hour and a half, so we're going to get through all this quickly. But we do a giveaway. Most of our videos we do a $100 giveaway. The last two videos, they've been just trivia, really. Nothing. Some of them were, I don't even think one of them was the last one that I gave away $100. I had instead of me being sort of imposed onto the YouTube screen the way you see me right now, because I got all fancy, I had a fake background, and it was like an order book that was imposed over, or it was over the top of a really well-known painting. It was Van Gogh's self-portrait. So I asked if who could identify what was behind me, and D Ross in the last two has won the $100, and I have no problem giving him a third. So you guys have some stiff competition, but I haven't decided what the question is going to be, and I don't put too much thought into it, honestly. So it could be really anything, and the first person that answers correctly wins the $100. Cornholio, how you doing, buddy? Beavis and Butthead, how you doing? Okay, Sweet Canary, Trader Mo, Crypto Cord, what a glorious 12K morning. Yes, it is, but we are, I feel like you're never out of the woods though. We're approaching an area where I want to say the market is going to get very slippery, but this is also an area where things can get very crowded. And momentum chasers are the ones that are responsible for those big kickbacks. And, I just want to keep everyone, on the same page that I am very bullish. I am once again just exposed to spot, but being very bullish doesn't mean that you enter in any position, right? You still want to be at good levels to define your risk and to really define proper trade setups. And obviously, just because the market is a long doesn't mean that every single place that we are right now is a long. It means that, you want to be, for me sometimes, even if the market is moving up, I know that the next long that I'm likely going to be looking for is actually higher than where we currently sit. But that's because at that point, we'll probably have passed through a pretty important contextual level. And I think that maybe even if we haven't passed through an important contextual level, if we have a really tight flag, I know that where we currently sit is not in a great area for me to define my risk. And you don't have to take every swing. So you get to be a little bit choosy, I think, at this point in your career. So, Banga, what's going on, buddy? I said what's up to you this morning. I don't know if you caught that. How's California? Okay. Nam nam. Nam nam. Lose less. Trey, what's going on? Where's the Zeppelin? Yeah, no more Zeppelin, man. They're pretty strict on their music rights. Okay, I think, so we got everyone on here. Okay. Jim de la Cruz Vera. Whoop, whoop, whoop. Sup, crypto heads? How's it going? AP, what's going on, buddy? All right, so we're going to start the stream. Got a few people in here. I hope that you guys can see the chat so you can maybe interact with each other and there's maybe no redundancies. If someone sees that someone posts that they want to see a link chart, we don't get 10 other requests. So if you want me to post a chart or if you want me to take a look at a chart, feel free to throw one up. Don't throw me, Homer's Odyssey of altcoins. Try to keep it maybe 1 to 2. If I could get some likes on the stream, that would be fantastic, because what we're trying to do is, again, take over not take over the crypto YouTube space, but what we're trying to do is really make it so that the right people are front and center. And I think that there are a handful of people that really could bring a lot of value to the crypto YouTube space, because it's a freaking cesspool right now. And I made a joke last week, and I said, the thing about the crypto YouTubers is, one of the things that strikes me as very obvious is that they just know what they're looking at. So they just know the chart. The chart is moving up. The chart is moving down. Oh my God. They don't really know anything about markets aside from that. So, we want to put the right people in the right place. And I think there are a few people that are in crypto YouTube right now that are really doing the right thing. And I follow them. And I think that you always have something to learn from everybody. I don't care where you are in your career. You always can learn. And if you're not approaching things like that, you will perish, right? Okay, so we get some likes and we'll start this up. All right, so really quick, one of the things that I've been looking at, and I look at this as sort of a higher time frame positioning tool. And I think by now a lot of you know what my approach is on the lower time frames, what my approach is on the higher time frames. They both kind of surround the same concept of identifying who is getting it wrong in that moment. Now, on the lower time frames, who is getting it wrong in that moment means that we have, an important level. Buyers and sellers are in relative stalemate maybe. One side might have a little bit more conviction than the other, press the market into a pocket, get itself cornered, and at that point, when the market reclaims an important level, might have been a few dollars above or a few dollars below, depending on for which side, at that point, there's part of the market that is caught offsides. They're in a position where they're trapped. And we see that on the lower time frames, when Bitcoin is in a period of consolidation, when it's ranging, there's a lot of just this trappy behavior that is moving price from one level to the next. You see that there is a big response with open interest a lot of the times as we pass through an important level and traders get trapped. I look at things on the lower time frame like footprint charts, even though they're very fancy looking and they look cool. Trust me, it's the least important thing in my trading strategy. It's just sort of I say it's like the cherry on the top, right? If I get to I have maybe 3 to 4 things that I consider before placing a trade. At this point, they're pretty automatic. I try to be as systematic as possible with my approach. And the footprint chart, the last little indication that I'm getting from it is that there is some obvious size that has got caught through an important level. So we're going to get back to this in a second. But for the footprint chart, all I want to see is that there's some obvious size that has gotten itself trapped. So this is a higher time frame aggregation of that. It's not the chart that I'm going to be looking at when I'm placing lower time frame trades. I could use this type of chart if I'm looking for maybe little pockets of stickiness. If we're in the middle of some dead space, and it might look like we're in dead space, maybe we're between a 2 daily levels and it looks like there's really nothing that took place. I'll look at this chart because I could see where there might be some imbalance zones that maybe are not as maybe not as obvious as they would be if you were looking at this chart. So if you're just looking at a candlestick chart, you really can't see some of the more, the more sticky points within the candle. You see just maybe, obviously at this point, you guys know the importance of higher time frame closes, but what I'm just trying to convey is I could see within the candle, I could see exactly where most of the volume came in, and I could see, more importantly, where the imbalances are. So I don't really look at this aggregation too much. What I'm doing when I'm looking at the footprint is I'm more often than not, if first of all, if the market is moving on momentum, I'll look at a volume-based footprint. If we've been stuck within a range, I'll look at some sort of volatility-based footprint. And it's really just a volatility or a volume-based periodicity. So what happens is when I'm looking at a volume-based periodicity, we'll go to the candlestick chart. When I'm looking at a volume-based periodicity, so we'll go to my 5 million volume setting or 3 million. So when I'm looking at this chart, each one of these candles is just printed through volume alone. So once there's 3 million contracts transacted, this is on BitMEX, it prints a candle. Okay, so what this is actually going to do with just that alone, it's going to give me some indication of absorption. Okay, some indication of where there's a the presence of liquidity and where there is an absence of it. So what you can see is when you have these really expansive candles, if you could just imagine, all of these candles are created equal, right? They're created by 3 million contracts. Okay, they're going to have different deltas. One might be just buyers, one might be just sellers, it might be a mix. Okay, and you could look at some sort of bar statistics to determine that. I don't think that that's necessary. I think that the more things that you introduce to the chart, the more things that you're thinking, oh, I got to satisfy that, and then I got to take a trade. Honestly, I think that you get into a point of analysis paralysis, and you start to think that it's a lot more complicated than it is, and I don't think that that's the case, right? But again, not trying to marginalize the difficulty of trading, but just saying I don't like to introduce too many things. When I'm looking at this, I could see, oh, okay, that's not a sticky area. That pocket right there was not a sticky area whatsoever. It's not like there was a lot of ask pressure. For the expansion that we saw on those candles, we got if you were to look at something that I would say might be complementary to this, it might be, if it was a bar statistic, it would be more than likely the range of the candle, right? Because let's just imagine, and consider that each one of these candles is created on a 3 million contract volume. Let's go to 5. Let's just do 5 because 3 million is kind of low. That's for faster conditions. Each one of these candles is created by 5 million contracts, right? Now, when the candles are expansive, when they have a large range, okay, that means that there's obviously not a lot of friction. There's not a lot of book pressure. Price was able to travel, a considerable distance for the same amount of consistent volume. And then you approach an area where you start to have different types of candles, right? Very simply, it's obvious that these are more compressed. Now you know that there's the same amount of volume behind those candles. So what this is allowing you to do in a very obvious manner through just this visual feedback is see, we're approaching a sticky point, okay? This is something that I'll look at whenever the market is moving very quickly. If we've been in more ranging conditions, which if you're looking at on the higher time frame right now, we're kind of poking our way out of one. But if we're looking at ranging conditions, I will look at something like a reversal candle, which is very similar to a point and figure candle. And if you look at, we'll put on a higher time frame setting one. If you look at a reversal candle, you see how it looks a little wonky compared to regular candles, okay? What this is going to do, it's only going to create bars if we move outside of what our current range has been. Now, this reversal candle is a 10-2. This is similar to a point figure. This is also similar to, and when I say similar, I mean the way that a rhombus is similar to a square, right? It's not the same. Similar to a Ranco candle, okay, where these are only going to be printed when there's a certain amount of upward progress or downward progress. And what it's going to do is it's going to really take away a lot of the noise, because as you can imagine, when you're looking at a time-based chart, if you're looking at it not something maybe as much as BitMEX as Bitcoin, because there's a lot of activity, but there's a lot of times when candles will just be printed through the passage of time alone. And imagine that, each one of those lower time frame candles, it's maybe just printed off of inactivity, is going to create a larger data set candle, right? A larger candle that is based on a higher time frame, and you might attribute importance to that when really the market wasn't doing anything. And the same idea is sort of you could apply to ranging price behavior, right? It's never, and this is sort of, I guess an educational portion of the beginning of the stream, and then we'll get into the I almost mashed that whole sentence into one word, and then we'll get into some of the charts. It's the same idea as looking at a TPO chart or a volume profile. It's never one price point that is important. It's where price has been distributed. It's where price has been accepted. It's what are the norms for price behavior. When you have an idea of where value is accepted, where value is determined, and what the norms are, you have an idea of, therefore, what stands out, right? Where are the outliers? And a lot of the times, for example, if I'm looking at a TPO chart like this, now this is extended, it's not a very balanced profile, but let's say that we're looking at, just to give you an idea of my approach, if we're looking at, this is a good example because this is a ranging structure, and a ranging structure begins when value stops migrating upward. So you'll see you have value overlap initially. I immediately start to look for some type of range to form. Now what that means is when we have a range that is forming, and you can have two back-to-back balanced days like this, then you could have days that are not necessarily balanced afterward, but you still have a relatively balanced structure. When you have a range that's forming, the middle point, what some people might call the mid, the value area, the meat of it, that is where buyers and sellers are in most agreement. It's where the most liquidity is. And I don't want to get involved where people are agreeing. I want to get involved in locations where we might have some level of imbalance. So when I look at a TPO chart, if you ever see me share a TPO chart, you can look at the chart right away and say, I know from looking at this chart, so let's say that we are right here. I know from looking at this chart, Kenner and Clark, Ryan just shared this. I know he doesn't get involved in here, okay? The only place that I'll get involved is at the exterior, unless this is a very fast moving trend and we've just broken out and maybe we're getting some type of mid retest and I'm anticipating continuation. But at that point, I'm probably going to be looking for signs of absorption at the low already. But the point is, I'm never looking at just one price point. I'm looking at how price has been distributed through time. And that is why it's important to look at some other type of candle, maybe besides just a time-based periodicity, because you take away that sort of noise that is created just through the passage of time alone. Not to say that time is not important, because time does factor into my decision-making process, but it cleans up the chart. So if we look at, just to show you a Ranco chart of what I was talking about, and I hope you guys like this color schematic because I did it for you. Here's a Ranco chart. So you see how immediately it gives you the more obvious pivot points for price. And what you do with this type of chart. Now, there are traders that just trade with this chart and they put this chart on, and there's a really popular and a great trader named Cold-Blooded Chiller. He uses Ranco. I don't even want to talk like it is anything that I am that familiar with. I just know that it's the same sort of concept as a volatility-based periodicity. I couldn't tell you the exact calculation. That's what I mean by that. He'll, I think, look at just this type of chart. A lot of traders will look at a chart that's a volatility-based periodicity that is just showing you where price has moved and done things different. They'll look at this type of chart to establish the structure, and then they'll go down to the lower time frames and look at a time-based periodicity to follow the interaction around those structural inflection points. So it's a very useful thing to look at. So if you want to learn more about that, I would suggest following him and really learning from him. I don't know too much about Ranco, but again, it cleans up some of the chart. Let's take a look at Bitcoin right now. The reason why I got into this to begin with, and I almost just completely lost that in that long ass segue. And remember, for those of you who follow, that I speak in ellipses and I always get back to my point, right? But we're doing this, is because I'm looking for trap traders in the lower time frame. For my higher time frame positioning, I'm looking for that same thing to occur, but with different indicators, right? These are, right now you're looking at fundings, but I'm not necessarily interested in funding. I know that if I look at funding, I get the answer right away for what I would be looking for before that, which is basis. I know that if we have a negative funding, it means that that derivative was trading below the spot. So it just tells me that spot has been stronger. And in a time like this, that is something that I'm really looking to as price gets more extended, because the spot market is going to show you what the actual demand is and how much actual interest there is in those new levels, right? So that's what we want to see with higher prices. We want to see if there's actually a spot demand. Whereas if we had extended prices right now, and let's go back to the time-based chart. And do you guys like this color schematic? Because I know someone complained about the light one last time. The more extended that we get, the more I'm going to be a little bit leery when it comes to positive funding, when it comes to derivatives trading over spot, that it should be called a negative spot basis, but it's called a positive spot basis in crypto. I'm going to try to be more aware of that and when that begins to transition. So right now we still have signs that, if we just look at BitMEX alone, that MEX is trading higher than spot. And you could look at MEX right here, it's at 412, and you could look at spot, it's at 416. There's a little bit of a, it looks like it's kind of, neck and neck right now, but throughout this move, what we've seen is that the derivative contracts have traded at a discount to the spot. And that's very important because at that point I know that, hey, there's really no one trapped yet. There's no late momentum chasers that have come into this with leverage, and where I think that maybe the market has, again, cornered itself into a pocket. So that's why I've been looking at the funding, because I'm looking at, that moment. I want to see when we're transitioning from maybe oh, this is the euphoric state where we still have a lot more follow through, to, oh, this is the point when people are going to get smashed. And I think that you're going to see that all funding is going to go positive, and we'll maybe start to trade at a premium to the spot exchanges. Let me see if there's any questions so far, and we'll look at the Bitcoin chart specifically. Greetings from the Philippines. What's going on, buddy? Okay. Hello from London. Hot chutney. Colin, what's going on? All right. Amazing stuff. Okay. Okay, yeah, guys. Feel free to subscribe to the channel. We're going to be doing this 3 days a week. Okay. All right. So, during times like this, again, just to put this all in a really tight, digestible manner, I'm looking to make sure that we do not get too disconnected from the spot exchanges. And what that means is, look at your Bybit, look at your BitMEX, look at your Binance, your OKX. OKX is kind of in a weird spot lately because of all the OKX drama. So I'm not sure that gives us the best representation. But look at those, the derivative contracts. A bad sign for bulls is going to be when those start to trade higher than the spot. Okay, that's not the end all, right? There are too many people that oversimplify, or I guess they place too much importance on things like liquidations and, we need to come back and take out these stops. In these type of market conditions, actually, I would say that that is far less applicable, because people that are coming on and longing on spot exchanges, if there's a new retail presence, which higher prices beget higher prices and pull in new retail interests, they don't really care about your levels, okay? They're not thinking, oh, before I get long, got to make sure that the 50 times longs are taken out. They're not thinking about that, okay? It's much easier so markets are typically, they're easier to long, right? The first thing that you do when you enter in a crypto market is you long, okay? Even if you came in to short it, you got to borrow, right? You have to long. So what I'm looking for is ultimately, if these start to get really positive, we start really trading higher than spot, and we don't see that spot presence, hey, then that's probably a turning point. I think at this point we're approaching not a sticky area, an area where price is going to accelerate. And I don't think, as long as we maintain these levels without showing any obvious signs of a trap, that we have further up to go. So hopefully everyone understands that. Now let's look at the BTC chart itself, okay? So yesterday, it was right around here, I said that this was a no trade zone for me. So let's just zoom out. And again, let's look at some of the more simple levels, because we do have new people in this stream, and I want to make sure that we cover all the basics first. For me, okay, there was a lot of back and forth in crypto, on crypto Twitter, about what to prioritize in terms of levels, okay? What you had right here was a bearish retest initially. For me, the more important thing was that we had broken out of a major contextual level, and I don't care where you draw this line now. We've broken through this, okay, and we broke above this. It's that simple for me. I wasn't going to not take that trade. I would be absolutely kicking myself if I did not take the long at this support and resistance flip. Now, my argument was, if you are constantly looking for a level of precision on the retest, okay, whether it's support or resistance, you're overlooking some of the more nuanced details when it comes to crypto, and that it's messier than some traditional assets. It's liquid. Bitcoin is liquid, but it's not. It's illiquid. And we do see a great degree of back and forth at important levels. And this is a prime example, because this area up here was the point of control for this entire range. So it was where the most amount of volume was transacted. And before I just go into that and take it for granted, like you know what I'm talking about, this level right here was where the most volume was transacted. It's got to change the color of that. 1 second. Not prepared. Not prepared. God damn it, Ryan. Right here. Okay. So this level, that white line, it's not, again, it's, let's do this again, man. Come on, dude. Get it together. All right, so we're going to make this red. Okay. So you see this red line right here. It's right where I already drew my line. I know what the level is by now. This is your point of control. For this 89-day range, that was where most of the volume was transacted. That's the fairest spot within that range. It's the area where there was the most liquidity. It's also it was the least, advantageous place to get involved because buyers and sellers are in agreement, right? What do you know more than those people that are right there? Okay, you're assuming that it's going to leave in one direction over the other. There's really no edge in that, okay, versus playing the high of a range or playing the low of the range where you have, not only do you have, if you're assuming continuation with this whole mean reversion process, auctioning between the lows and the highs, not only do you have that behind you, if there's no reason or catalyst to assume for a breakout, but you also are in a more optimal area to find your risks rather than getting flat-footed in the middle of a range. So that point right there, that's your point of control. You notice how the highest weekly close we had here was low, here was higher, here was lower. So the idea that I'm trying to convey is it was messy. It's not a line in the sand. I say a line in the sand to try to, I guess, again, I hate to use the same word, convey a level of importance for higher time frame levels. Line in the sand for me a lot of the times means where I'm going to cut the trade, right? That's my line in the sand. Which ultimately does come down to a point, right? At some point, your stop, your invalidation, you're going to focus on a point. You're not going to say, my invalidation is if we get accepted into this $100 area. No, but at the same time, when you're looking for a response, right, a return to, you have to understand that it's not a specific price point. What you will find at specific price points is that if you were to look at a tick chart, whole numbers, 10,000, 9,000, 13,000. These are psychological levels. They're lazy numbers actually because traders are going to be placing their stops around them because they're lazy, right? So it takes nothing to write 13K versus thinking, oh, 1,317, right? It's a lazy price point. And what you'll see on a tick chart is that if you were to look at transactions at specific levels, you'll see that whole numbers, levels like that, very simple, 10K, 13K, there'll be a little bit more volume transacted at those levels just because people, they anchor to them. But it's never, again, just a specific price point. This has been a loose area on the way up. You should have understood that it would be likely a loose area on the way down. So that was my whole argument. Like, why are you drawing the line at, this specific price point when it's really just that, hey, I want to see a level of responsiveness at that low. I stepped in. I was willing to get hit right away because we approached it vertically down rather than grinding into it. I figured, hey, more often than not, when you approach something vertically like that, you get a response. And I like to think that you're counter trading the fear that is normally instilled in people as price is approaching a level vertically, and you're getting rewarded for that, right? Because that is the more common, I guess, the more dominant emotion within the market at that point. Oh, price is collapsing, it's approaching this level vertically, and then more often than not, you get the response. Versus it as if whatever. If price had gradually moved down to that level and you think, oh, it's a nice retest, I get to just walk in. No, that's not how it works. Okay. So this level was very loose and on the way down expecting the same exact thing. Now, where we sit currently, it doesn't look like there is much in our way. We do have some levels above us, and I'll go to the Phemex chart. I'm not taking these levels for granted. Not taking them for granted whatsoever. Okay, this is the daily highest close right here at 12,938, and this is the daily highest high, and this is going back to 2019. That's 13,920, and remember that's on BitMEX, and that's on BitMEX, and remember that has a little bit more follow through. If we look at Coinbase, it's slightly lower. I'm not just going to discount those levels. I'm not going to just hold blind long leverage positions into them or derivative positions into them. I do think that given a sign of strength at this point, I want to see some level of consolidation. So I'm not just longing here. As bullish as I am, I'm not just longing here. I think it would be an asinine decision to long here. The only reason that I longed back here was because we started to overtake previous levels within price action. And I know that after you have a big breakout like this, bears are always, and I don't want to say bears and talk too much about bears and bulls, but that's the way markets have been for a really long time. The concept of bears, I think, goes back to the 1700s. It has to do with bear trappers and bear hunters and the concept of don't sell the bear skin before you hunt the bear. But there's this, I don't know what it is. Like, it's flawed to me because we just broke through major contextual levels and people are still trying to short this. And there are algos that are built around just pressuring price to squeeze things upward even more, knowing that people are looking to get in the short immediately, And it's just not that simple. So when we had this move up here, I wasn't looking to get long back here, but once we had this move and we had something that looked like a measure of kickback by the other side of the market, it wasn't that serious though. So it wasn't like we had this blow off top. I knew that the moment that we had a pullback and I knew that the moment that we had a pullback, once we had something like this, I was going to get long when we started trading over just that previous level. So it was that simple. There was no CVD involved in it. There was no delta divergence. There was just a good amount of aggressive selling into that low. So if we just look at this right here, so we'll go to, and as we're doing the stream, price is squeezing upward again. So if we just look into this low, you have this aggressive selling into the low. You can see there's a ton of aggression. There's negative 27 million, or it's just 27 million contracts sold at the bid more than there are at the offer. So this is a ton of volume, okay? Not only a ton of volume, it is, not a ton of volume, that's the wrong one. This is a ton of volume, and that is a lot of aggression by sellers. Now, volume for me to take advantage of any trade like this needs to be a multiple of what the norm is, and this goes into establishing norms. For those of you that follow on Blockroots, you know that I know what the average TPO is, I know what the average value area is, what our average 30-minute rotation size is, so you immediately know, okay, that stands out. That's 2 times the average, that's 3 times the average, and that's what I want to see. And in this case, we had the multiples in terms of volume, and we had a ton of aggression, and all I want from that at that point, and to be honest, I wasn't looking at the footprint at this moment either way. I just started seeing volume come in on AgriTrade, which is something that's just a tape. All I know at that moment is I just want to trade above the level where that came in, because we're going to have at least a move back up to the high. So just a scalp, wasn't holding on to this whatsoever, just a TP right away. But again, where we currently sit, we're now accepted, so I don't really care too much about this high up here. I do think that I have to be mindful of those levels, because we're approaching a point where we're moving in a semi-vertical fashion. So I know that we're going to have some level of consolidation. What I would want to see before, let's say that I was looking for a short, which I could, right? I've taken plenty of intraday shorts. I just don't think that you should be looking for them in this environment more than you should be looking for longs. What I would rather see if I was looking for a short at some point, let's say we're approaching this important contextual level. It's not that important. It's the all-time high of 2019. I know that sounds kind of ridiculous because I'm saying that's not that important, but again, I've started to focus on more of these higher time frame contextual levels that have had multiple interactions with price. Again, just kind of showing us, hey, there was an immovable force on the opposite side of us, and now we've done away with it. Okay, that's significant to me. This was a blow off top, which is why I'm also considering it a step below everything else, the same way with this blow off top, because there's really nothing that's a place up there. There are people that look at, and I don't want to phrase it as I say there are people as if I'm talking about them like they're doing something wrong. Everyone has a different approach to ranges. For me, a blow off top is not something that I'm going to really be considering. I would say that this is important from a psychological standpoint, but what I'm most considering, again, and I went over this last time, is just where did most of the volume transact for the entirety of the structure. So this is taking a second to load. We'll go to a different chart because that's going to be, there it is. So you could see that there's this darker shade right here. This is the value area right there. Okay, 70% of the trading activity for the last 2 years took place, 3 years took place between here. Okay, no surprise, we know that. Not really much that was transacted up here whatsoever. So this is what I would, when I'm marking up my chart, I look for sticky points and I look for points in which price would probably accelerate. So I'll look for a lot of things, major contextual levels, that's weekly structure, the monthly structure, daily structure. I consider what you consider, because if you're going to be placing your trades based on, on behalf of that, I have to be mindful of that presence, right? If a majority of people assume that a weekly level is important, I will likely take a trade initially off of it, and then if we close the weekly through it, then I'll get behind that as well, because I know that this is a retail-driven market, and it's a technically driven market. Maybe we're approaching a point where those things are less important, like I said, because if we do have a retail influx, they're not as mindful of these technical factors that we consider. But either way, there is not much that was transacted up there, okay? It is, or rather, when I'm looking at a chart, I'm looking for those important inflection points. I'm looking for places where I think price is likely to accelerate. So you might hear me refer to these as gaps, where it might we might find a level of friction where price is going to be sticky. I'll use different terms from time to time. I'm just talking about where we are finding some level of resistance. At this point, this is your meaty area. Okay, meaty, it's thick. There's a whole lot of activity that took place between there. On the higher time frame chart, you'd say that that is a more liquid area than this is likely going to be. Now, we are basically on our way to being accepted into that area. Okay, this is right now the highest weekly close that we've had going back all the way to 2017. I don't think that there's going to be a lot of selling pressure as we gain acceptance further into this area. Okay, there's not any real price memory. So there's no memory of activity up there in terms of dormant orders. I would assume there's no resting orders that are going all the way back to that point. It is a psychological level, so if anyone is still in position from getting long back here, hey, maybe they're going to try to cut their position now. Do I think that that's a reality? I don't think so. I think that, I mean, it could be, right? I don't want to say that, but if I'm a new person approaching this chart, I'm looking at this, with rookie eyes, and I'm thinking this is probably going to break the high. I think that this is not going to be too much of a, I don't think there's going to be too much of a kickback if we get up there. For, maybe initial kickback, right? There are going to be people that are going to take profit at that level, but I can't see us, I got to rephrase that. I can't see us finding too much resistance, between this level, okay, and something like 17, or I think we could easily move to 15 from here, honestly. I think that when people are saying something like 14, I think a lot of times we're just going to blow through what everyone is considering. Okay, so in terms of a pullback, though, what I'd be looking for eventually is obviously the other side of the market to step in. Okay. Now, I'm not saying that that's not going to happen. So when I'm very confident, I'm not just forgetting the things that have, the things that I've considered this entire time, right? Proper risk management. What I would be looking for is some form of a 3-drive structure. Very simple, right? Some form of a 3-drive structure that says that, price has found a level of resistance in, the umpteenth times that it approaches it again, it's doing less and less, or it's accomplishing less and less at the upside. Just to give me an idea that we have found some level of supply. I'm not going to try to guess where that's going to occur. I'm going to wait for price to show me that we've walked into that. But again, we haven't found the other side of the market yet. So this is a concept that we talk about in auction market theory, which is just the other side of the market, where you find a level of responsiveness that says, oh, okay, don't mess with that spot yet. We have some work to do. We haven't found it yet. Okay, so we'll wait before we see that, before we start to, try to pull levels out of our, our rear. But I would say if I was going to guess, there's a good amount of confluence between that 13.8. So now we look at that. It's a good amount of confluence between that 13.8 and this previous weekly cluster back there. So could price squeeze all the way up there before we have a level of responsiveness? Absolutely. Again, this is kind of dead space, right? So this is dead space right here. Not much volume transacted up here whatsoever. Consider it like this. What is the incentive for you to act in the middle of a space versus at the extremes, right? If you're looking to short, it's really a better idea for you to wait till we're around an area, or we're within close proximity to an area where you can better define your risk. Okay, where you could say, oh, okay, if price is accepted above that high, I'm wrong, right? If that's going to be resistance, it should show up. The same thing can be said for longs at this point. I think that it's completely within reason to get a flash pullback. Where would I want that pullback to stop? I wouldn't want that pullback to gain acceptance back within this range. And that was my argument back here. Okay, this is your bearish retest. It's supposed to do its job. Once you gain acceptance back within the prior range, I just look at it the same way I look at a lower time frame range, and I say, okay, we're probably immediately going up to the high. I don't even, at that point, I'm not really considering anything else. I obviously have to be mindful of it, but more often than not, we'll see that if you're patient, this plays out. As far as where we currently sit right now, if we are gaining acceptance through that range, right, and we're just doing away with it, the most bullish thing I think that we could see would be to treat the top side of this as support. I wouldn't want to start going back within here, and then we're just opening up the possibility for it to get slippery again to the downside. Let's see, is any questions? Because I'm kind of bowling on. It's the first episode of Coffee and Crypto, and I'm forgetting to drink my coffee. I haven't had any of my little cookies yet. Okay. Colin, let's see. Come on, bro. You lost credibility at Bybit? No. How did I lose credibility at Bybit? Oh, you're talking about someone else. No, well, Bybit right now. So how does someone lose credibility at Bybit? Look at Bybit right now. It's probably the leader in liquidity. Okay, Bybit, lowest spread. That is by 1 million. And then Bybit is, I don't know why Bybit isn't there, right? Skew for some reason. It's omitting Bybit from number one here and then putting it back the last few days. Bybit is the most, I think, one of the most liquid exchanges you could be on right now. Okay. So, opinion on behavior of alts today. So yesterday, well, for the last week now, I've been saying that alts are going to get smashed if Bitcoin moves up. Alts had gotten themselves in a position where they really couldn't improve in the near future, because if Bitcoin was going to be moving down, alts are going to get smashed. If Bitcoin was going to be moving up, alts were going to get smashed. So what you can do is you can look at Bitcoin dominance, and you can see that Bitcoin dominance has been going up. Too many people want to buy the bottom, right, in alts, and it's like they're looking for the ship to just sail again when it's crashed itself on the shores. It completely needs to be rebuilt, and what that means is things need to be almost forgotten, I think, for a certain amount of time. And, however long that is, it could be a month, 2 months, but too many people think that you're going to get a V-shaped reversal in these things because they attribute too much importance to them to begin with. You start really buying into the narrative, the project, whoever's behind it, whatever. I do the same thing. When things are on the up and up, it makes me confident because it makes other people confident, right? So when I was in MTA, when I was in SRM, and they were moving up, I love the idea that Sam is behind it. I love the idea that Three Arrows is a supporter of MTA, for example, or has a position. But they had a position way earlier than anybody else. I like that for what it is during the time where the trend is strong. But once we lose weekly market structure on an alt, I'm out until we reclaim that. It becomes way too, lower prices, higher prices beget higher prices, lower prices beget lower prices. There's really no, I say this all the time, Apple drops $50, you're going to get people that don't look at a chart that are going to step in right away because they think Apple is a value buy. There's none of that in crypto, right? Lower prices mean that people step out of the way. Everyone's just waiting for it to fall, right? Waiting for it to find the bottom. And also, let's say that, you find... So someone drew this, this was Suzu, he drew this euthanasia roller coaster. And this is what you get with alts, because at the point of the last peak, okay, everyone is focusing on this at this point, and they know that it's not likely to return there. They know that it's likely to turn somewhere within here. So what happens? At the point that things start to look like they're on the up and up again, you already have people that are thinking, I got to take profit first. And what it does is it just creates this sort of bouncing ball pattern where things they go flatlined. So once something goes parabolic, I believe Ari David Paul said this, once something goes parabolic, you're going to see that it has to go all the way back down to its original resting place before it could resume again. And that it is the way it is. 99% of the time, that's exactly what occurs. If I was going to be looking for alts right now, I would be waiting for ETH to start outperforming. And ETH right now is underperforming BTC. Go figure. Okay. I think that, and I've been saying this now for the last 2-3 weeks, we've talked about it in the newsletter, I think that everyone was short Bitcoin. And they might not have been outright short Bitcoin. Okay. They were not necessarily on a derivatives platform opening up a short against Bitcoin. That's what I mean. But what I'm saying is the same way that, when you're long Bitcoin, you're short the dollar. Okay. When you are crowded in DeFi, playing around with these, ridiculous produce named protocols, getting yield on bananas, right? I said yesterday getting yield on Tylenol. That means that you're short Bitcoin, right? Everyone's attention is over here. Once Bitcoin starts moving, you get the fleet equality effect. I don't care. You don't have to be a Bitcoin maxi. You know how Bitcoin trends, right? And even if Bitcoin is going to be the one that underperforms, right? So Bitcoin is a lower beta of Bitcoin and ETH, which by me saying that, I'm implying that I think, and I'm telling you actually that I think that ETH is probably going to outperform Bitcoin to the upside. Even though we know that, there is this sort of lore around Bitcoin that is not present in other assets, okay, because it's not ETH that's on CNBC, it's Bitcoin. It's not ETH that hit 20K, it's Bitcoin. So once it starts moving up again, no one wants to miss out on Bitcoin. And it's a lot easier to get in Bitcoin than anything else. Not anymore with regards to ETH and those pairs, but it's accessible, right? Immediately. If you're on a crypto exchange, if you're on a fiat on-ramp, you always have a Bitcoin option, all right? You might not always have, pick XYZ coin. So I think that Bitcoin is going to move on its own for a little while because everyone's attention was focused on these other assets. And essentially that meant that they were short Bitcoin, right? Because now that Bitcoin is starting to move, everyone's thinking, well, and I hate to say everyone because it's like I'm presuming that I know how everyone is positioned, but no one wants to be on the sidelines, right? And that's why, and this gets into why momentum chasers are the ones that are responsible for the last leg of the move, and they're the ones that are the latest. They're also the ones you could blame for the big blow off tops. But for the time being, I think that everything underperforms Bitcoin, and we will see this leader laggard effect with ETH. But again, I'm not going to try to guess the turn. I'll get behind it, right, when ETH starts showing relative strength to BTC. So here is an Eth Btc chart. All it's showing us is the relationship between ETH and Bitcoin. I hate saying BTC. I wish I just knew immediately to say Bitcoin. It like bothers me. When I talk about the pairs as their three-letter, as their three letters. So this right here off of this low was a sign of strength. Some people were saying, oh, it's going to start playing leader and laggard right now. I don't think it's ready to do that yet. And I would rather honestly be at a point where we're back within this range. My level for ETH for me has been, and I've said this for the last, I feel like it's going on at least a month now, has been 392, 395, just that zone. So 392, let's just say 392. So 392 for me. Okay, back above this point. All right, that is the point of control for the structure. That is an important weekly level. So I'm looking at the daily trying to show you the weekly level. That's right here. Okay, start gaining acceptance within there, and I will buy into resistance. But until it does that, I'm not going to be doing that because there's just there's certain criteria that I need to have met before I jump off of the thing that I still think is going to be the leader. Even though I think that ETH is a laggard and that it's the higher beta, I don't want to get out of something yet and presume that I know that is occurring before it shows me more signs, right? My signs, not your signs, right? Mine is 395. Yours might be right here, and that's great. And if you get in right now and it goes to 395, you got in before me. That's awesome, right? But I have certain criteria. You have certain criteria. Some people trade on moving averages. Some people trade on RSI divergences. I don't know how they do with all the 90 trades that don't resolve the way they intended. But, that's just my criteria for the ETH play. And I think from ETH, it is going to be sort of permission or a sign for many that it's time to get back into alts. I don't know if that's necessarily the case yet, though. But again, when it comes to, let's just pull up a pair. I think that Wi-Fi is on its way to 4 digits again. But when it comes to Wi-Fi, like that's what I think, right? It doesn't mean that I'm not going to act unless that happens. If Wi-Fi starts retaking previous levels, 16K, for example, so above this level in this zone, so again, it's not exactly 16K, but it's this highlighted area. If we start to put in strong price action above that level and we give it offers me an opportunity to really define my position in a tight manner, then yeah, of course, I'll take a long back up to what I think would probably be 20K. I can't get overly bullish on this, though. I understand that might mean that I miss out on the 80% of the move rather than the 60% of the move. But honestly, I don't give a shit. Sorry about that. But I don't really care about a lot of the... you're going to look at alts and you're always going to feel like you're missing out on something. But I'd rather have really strict levels when it comes to alts, miss out on some of that upside, and then have a few punts that I just don't care about the chart at all, then give alts really weak criteria to satisfy and constantly be on the wrong side of the trade by not requiring enough, right? I know it's going to work out for some, but it's just not, it's not going to be how I really try to consistently apply my approach to alts. You've seen how the cycles work. You've seen how there's always a freaking awesome narrative for these things when things are good, right? But then 6 months later, it's like, we're buying into that. Like, it's not the white, everyone talks about the ICO stage. Oh, we've moved past the white paper stage. Now we have these, it's this incredible advance in decentralized finance. I get it. It's really awesome stuff, but that doesn't pay the bills. And if the chart is not showing that people are interested, and I'm not saying that the chart is the only thing to go by, but if it keeps making lower lows, I don't care about, the team, right? That's fine, but I don't, that doesn't work. It hasn't worked for a lot of things that have just completely become the accumulators of dust, right? Things that are on CoinMarketCap that are irrelevant now. And I hate to say it, some of them are still in the top 10. Okay, let's see. What else we got? So ETH is not as bullish right now. I do drink cold coffee. I do. Good night, Colin. Thanks for stopping in, man. Okay. So I think we have work to do with alts. I think ETH is close to, put it this way, like we'll know very soon, right? Or we should know very soon what ETH's intentions are. So yes, I drink cold coffee. Yes. Yeah, well, listen, Ethone. Bybit is number one by liquidity right here. But for some reason, maybe it's, that's near price liquidity though. So, not sure why that's not popping up here though. It was popping up recently and then it just completely disappeared. So, hey, I guess we should trust it because this is skew and it's pretty damn accurate. But I'm just confused as to why it suddenly would fall so far off. Not really sure why. Not going to say that it, go dump 5 million into the book because it should be there. But it is right now. It's where most of the open interest looks to have gone from BitMEX. So follow the footprints. You live in Laguna. Nice. Yeah, this video will be available on Rewatch. X factor. So if you understand your trading strategy, you're taking your trades on whatever mean value area indicator you were considering. No, so the footprint is the last thing I look at. And it's not, so let's just say that I have, the first thing I look at is higher time frame structure. So I want to get some idea of context. And I said this a few streams back, and it's, I don't know who said it. I know a few traders have repeated it, but they didn't come up with it. It's, what is it called? So you could say, I'm sorry, and you could say, my bad. And they mean the same thing, except for when you're at a funeral. So that's an idea of context, right? So I'm trying to gauge market context. For one, I want to see if we're in a trending period or we're in a balanced period. Are we, and this is something that you should see structurally, right? You could see when we're consolidating, when we're bracketing. But I want to know whether or not, initially we're in a trending environment or a ranging environment. I want to see where value has developed so that I know, where are buyers and sellers doing business the most. If we're balanced, if we have a balanced profile, if we have something like this is a balanced profile. I don't want to get it. So when you're looking at, so one thing that we have to talk about is at some point if you get interested in TPO and you want to learn more, you want to go to Blockroots. There's a few other guys that have great educational platforms on TPO. You're not going to be trying to so much predict how the day is going to resolve. You'll get an idea over time, when a day structure begins to be printed. Oh, typically this is a day that results in a double distribution or long liquidation, or oh, this is looking like a normal variation setting up, or oh, this appears to be a balanced profile setting up. But when you're looking at market profile, what we're doing is a lot of the time focusing on the last day. So what is the current context? What are we coming off of? So if we go back to a structure like this, for example, let's say that we currently opened up right here. I know that we're coming off of a very balanced period. We have two back-to-back balanced days. This is an inside day. So this day has opened up inside and is within completely the prior day structure. It closed that way. Not only that, we have inside value. So 70% of the time, we spent within this structure right here. 70% of the time for this day as well, we've been confined to the same exact structure. So right away, I know that buyers and sellers are agreeing there, okay? That is going to be an area where there'll be a lot of liquidity, so it'll be really easy to get into a trade, but it'll also be very dangerous because I don't necessarily know if that's going to result in a continuation or a reversal. But what I do know is that this is so balanced that the exteriors will likely offer good trading opportunities. Now, how I'm going to go about acting on behalf of that information will be determined based on the interactions we have around those levels. So when I'm looking at a TPO chart, what I'm doing is I am identifying the important levels that I'm going to be looking for or looking toward to do business. So for example, I would do something like this. This is now a composite. This and this are my levels to focus on. So this is right here. This is that's not showing. Oh, there we go. So that was back then 11,400, and this was 11,300. So I am looking for either absorption at that high, so a sign of absorption. I could look at CVD. I can look at momentum on a footprint. I'm looking either absorption at the high or at the low, or the signs of acceptance through, because then we also have that inside day break setup. So right away, I have the areas that I most focus on, and there's nothing within here that I'm focused on. I'm focused on the exteriors right away. I know, okay, we have two balanced back-to-back days. I'm looking for either a break from balance or some type of mean reversion. For the mean reversion, I'm going to look for a drop in momentum at those exteriors, a sign of absorption, or if I'm looking for a break, I want to see a sign of acceptance. Okay, and that's when I probably go down to the lower time frames and look again at some type of price action, and lastly look at a footprint, right? If I see that we have a very balanced structure, I have the levels that I know I'm willing to do business, and let's say I see that we have strong price action, but then I go down to the footprint and I don't really see, I'm normally looking for, if I'm looking down on the lower time frames and I'm looking at a 5-minute chart, I'm looking at a footprint chart on the same time frame, I'll look for signs that we have 2-3 million contracts hitting the book if it's at the low, for example. So let's say that I'm looking for absorption at the low and I'm looking for a good trading opportunity at the low, or if it's at the high, right? If we break above the high and we see the same selling above there. What I would want to see in the footprint is, let's just find an example so I don't have to talk about hypotheticals. So what I would want to see is what I know is a big amount of volume or a large amount of volume. All right. So something like right here, where are we going? Okay, right there. So we have 1 million contracts hitting the book. We have -4 million in terms of delta. Okay, this is also going into this low. This is multiples in volume. So what I know are the norms leading up to this. So you could see on average we're around 3-4 million contracts traded for the duration of this structure preceding that sell. Once we move into this low, some people might call this a little mousetrap. I don't know who coined that name, but I saw it shared recently and I've heard it before. Once we move into that low, we have an influx in volume, multiples of what the norms are preceding that action. So we have 6 million contracts, 14 million contracts. And not only that, we have a pretty obvious increase in aggressive selling. So I look for that in the footprint because then I know immediately, and I've talked about this on Blockroots, I know that if we're still within, basis points of where that came in, so 20 basis points, 30 basis points, which is just, think about this as 20% of 1%, right? If we're still within less than 0.5% and we're trading above that, that person's probably going to unwind. They're probably going to puke their position. And at that point, it offers me a trading opportunity for at least probably a 1 to 2% scalp. I don't want to just say, it always offers me that opportunity because it's never that simple. But if there's a good amount of volume that came into this pocket, so you see a ton of aggressive selling at a level, again, that I've considered to be important. So let's say that this is the value area high. We've broke above. This is the selling retest. Okay, we have 2 back-to-back balance days. I knew that. We have an inside day setup. Great. Now we're above value, so we didn't get absorbed. We didn't get absorbed on the way up, so we're not mean reverting, it looks like. And now we're selling the top side of the structure. Okay, the footprint shows us that there's a good amount of aggression coming on the top side. That's great. That adds to my sort of argument that this is going to squeeze further upward. If I don't see that, 80% of the time I'll still take the trade. Okay, just because it might not necessarily be that we need to have a ton of volume to I guess signify that the continuation is going to happen, right? Because it's not always. I think that too many people lately are getting hung up on the concept of needing to always take out stops and its liquidity levels, and That is when there is a growth driver at play. So right now, it seems to be there's a fundamental and macro growth driver at play for Bitcoin. That stuff becomes a lot less important. That stuff is important when we're just trading against ourselves. When we don't have bigger players coming into the space. When we're in more of a ranging environment. Not when we're in a strong trend. It just becomes that less important. I like to see it, right? It adds to I guess my confidence levels, and if anything, let's say that we see, let's say if we're here we have a strong trend and we see that on a retest or on a pullback we have like 10 million contracts sold, and then we're trading above that, I'll go heavier, right? But I won't. It won't be the determining factor. That's what I'm trying to say. If we have strong price action, I can get behind a trade. It might be the determining factor in how much I'm willing to sort of, how hard I'm willing to swing at that, or what I'm anticipating would happen if we start trading higher. Okay. Check uni. Okay, let's look at some charts. Let's look at Bitcoin because I forgot what it was doing. Okay, good stuff. Yeah, I don't want to say that there's any reason to assume anything negative yet. I mean, yeah, cool, good stuff. Good for you, Bitcoin. Really happy for you. Okay, so let's look at uni. So when I look at a chart like that, and you see me sort of give that, I guess, blasé kind of silly response, I'm sort of just visualizing people thinking right now that this is a short. And in my experience, after you break out of important levels, just let it go, man. Don't, there's people that are just going to help this squeeze further upward. We don't really show the signs yet on the higher time frame of a poor positioning by longs. One thing that is showing up is this really optimistic skew that we have. So if we're looking at 25 delta skew, I've gone over this before. It just says that calls are being bid much more. Makes sense. Everyone's looking for upside exposure right now and some form of upside leverage. I don't want to say that the first sign of this is a sign that traders are off sides. When it comes to higher time frame positioning, or my argument around positioning for the higher time frame, it needs to be persistent. It needs to be over a longer period of time. So what I would want to see is, okay, price has, so for a high, for a top, what I want to see is this, the inverse of a bottom, right? So price has, one, we've come off of a massive stage of euphoria. Now price is ranging, but we still have a ton of optimism, and the optimism is showing up in things like futures term structure, still having that pretty considerable basis, so you're probably going to have positive funding as a result of that. And then we have something like 25 delta skew showing us that calls for 25 delta, or rather 25 delta calls are trading more expensively than 25 delta puts from an implied volatility standpoint. So what that says to me is everyone's still really long, or upside borrow, whether it comes to futures or upside exposure in options. Everyone is still looking for that, but price is just ranging, right? So we've come to a point where I think people are getting a little bit ahead of themselves. We're not there yet. It makes sense to see a market want more upside as price is moving up. So make no mistake, funding can go up, and it doesn't necessarily need to mean that it's now a short. People are going to want to buy or pay to borrow for upside capture when there's a strong trend. That's the way it's going to be. I mean, it's going to become more expensive to have upside capture, to borrow, right? So that's normal. Where it's trouble is when you have a persistent positive value or increasing value for upside capture, but there's no more upside, right? Price is ranging. So that is sort of a sign that someone is getting trapped. Similar to, when we look at CVD or the footprint for the lower time frame. Same kind of concept, right? Price has been staying here, but aggression has been continuing in one direction, right? So the chart is at that point showing us that price is not making any further advance. So let's look at uni. Yeah. This is I'm not. There's no levels for me to really change on this chart. I hate when there's auto scaling on this, and you have one of these ridiculous candles. one thing I'll go over in this video again is perspective, because I went over AVAX for somebody last video, and there's two different charts, and they gave you this different. They gave you, for me, two different impressions, and I think it's important to talk about that again. So uni for me is, I said 450, but ultimately this 390 level that's your first. That is the most important daily level, I think, on the chart above where we sit. I wouldn't want to be buying into that, and 450 is. Okay, that's why did I say 450 last time? Was it uni though? Maybe it wasn't uni. It might have been something else. So 390 back above this low. I would start maybe looking for setups if we start treating this as support. I don't want to say too much about it though, because I don't think, again, you know where my stance is on alts. I think that we can continue to have these dead cat bounces, and I think that a lot of them are. So again, I require more from it at this point than just the sign of maybe a lower high, right? Excuse me, a higher low in the making. So even if this does something like this, been burned before, you know. So I don't think that looks too attractive. In terms of AVAX, this is the chart I was talking about when it comes to perspective. So you have AVAX, same chart. This is coming off of a big red candle on OKX. This is coming off of a big green candle on Binance. Personally, if I was looking at this chart, I think this is a scarier looking chart, okay, than this. All right, same chart though. Now for this, I would be looking at this high and this low, and I'm saying, okay, this is our clearly defined range. This is, for me, a long opportunity. Price discovery, highest daily close right there. Okay, it's going to be the same on the other chart. But this, to me, says reclaim, shows sign of strength. Whereas this looks precarious, right? I wouldn't immediately be thinking, all right, I'm looking for the long up here. I would be thinking, you know, if we break above there, that looks like a long, but my bias immediately looking at this is, oh my God, this is going to fall off a cliff, you know? So just to show you how your bias is going to affect your, you know, initially your decision-making process when it comes to judging things on face value, and how this is the same exact chart, two different exchanges though, the immediate response off of the exchange is setting me up to have a different emotional response. So it's an interesting thing, I think, to go over. But alts, I think they're all in the same spot right now, man. Bitcoin Cash. What is Bitcoin Cash? Is that a... I'm not familiar with it. No, I'm just kidding. So Bitcoin Cash. We'll go over this. Okay. Did I put this? I thought I put this on for somebody. It's going to be underperforming BTC, right? Yeah, it is. Some upside right now, just because we probably passed below this swing point. But I mean, if you're, how would I go about playing Bitcoin Cash if I had any interest in playing Bitcoin Cash? First level that I could think of is right here. I mean, you could say that this little poke below there is a reclaim, and you know, maybe there's a long opportunity up here, but I think that it's when you start oversimplifying things like that, like, oh, if we lose the level and we reclaim it, then it's a long. I think it just, again, it takes out context, and it doesn't matter, you know, at that point. It's like this doesn't trade independently. If I'm saying in the same breath that I think Bitcoin has further up to go, then I'm saying that this has further down to go. That's the mode that I am in. That is sort of the umbrella, you know, my umbrella approach to things right now. I think that everything is going to get hurt. So I can't really, you know, if I was to long this, it would need to be back above this swing point. And this is going back to just really looking at this entire cluster right here. You can see that this is going to be a pretty important resistance to overcome. And that goes back, we go back to the daily level. You can look at the extreme lows of this. I want to be back above here. Do I think we're going to be back above there anytime soon? Nah, I don't think so. Nah. The VIX. Someone asked about the VIX. Okay. Let's see. Metrics. Correlation. Just to show you, the VIX and BTC have an inverse correlation. Now the VIX goes up when the S&P goes down. So go figure. The S&P and Bitcoin have had quite a strong correlation as of recently. We'll just put this on here so you could visualize it. So, and Bitcoin obviously correlated with the dollar recently. The interesting thing is these correlations have weakened in the last 48 hours, which is great. The VIX, here we go. And BTC. Why is it doing that? No, I guess I could do this. Where is BTC? Core sample. There we go. Okay, there you go. So inversely correlated, right? We'll just look over the last 360 days. The VIX, the fear index, based on the applied volatility of options on the index, right? So S&P index options. Now, this has an inverse correlation with BTC, and ultimately when the VIX is going up, that is when equities are more than likely, shitting the bed. Right now, VIX term structure a bit elevated into November just because everyone's sort of anticipating volatility from the election or a contested election, or it doesn't matter. The market is pricing in volatility. When the VIX moves up, BTC has an inverse correlation with it, meaning, what I'm implying by saying that is that if the VIX moves up drastically, it's not just if it moves up, it probably means that equities are getting slammed. If equities start getting slammed again, it would be difficult, I think, for Bitcoin to shake that. I think that there's now sort of a window of freedom that Bitcoin has where it's like if equities are slightly correcting, Bitcoin seems to be doing fine. But once the floor drops out in equities, I think that Bitcoin goes back to being a higher beta play on the equities. I think that Bitcoin is a higher beta play on stocks, and that's what I'm confident on the S&P into the next year. And that being said, I think that for a lot of fast money types, Bitcoin is sort of a higher beta tech stock. Doesn't matter, the narrative's great. I get it. There's a growth driver also, but I think for a lot of participants, they're also playing it in the mix as a higher beta play on equities. So if they're going to be treating it that way, then you're fading their selling pressure. And if the VIX goes up drastically, Bitcoin probably goes down. This has been a pretty strong relationship now for quite some time. Okie dokie. All right. Good resources for market profile. Well, so Blockroots has an entire course dedicated to it. But before people get into a course, before you fork over money for anything, don't try to learn for free. We live in an age right now where you could actually learn a lot of things mostly for free. So start with, I always say to take an academic approach, and for me, I've always been kind of a bookworm. So I want to say I'm still a voracious reader, but as of the last month and a half, I've really, I don't know, I have to get back into reading because I started a few new books, and that's maybe the problem because I started more than one. But this has had my focus so much that it's been hard to really get into a book. My wife reads every single day. She'll read and then fall asleep reading, and I'm jealous of her because I haven't had a chance to really sit down and enjoy what I guess I thought I'd be enjoying by now, which is some literature, but not literature. It's just being able to enjoy myself and sit down and have a few moments to myself to read. But to take an academic approach, to first take advantage of the greats that have come before and written down their experiences. And that's a great thing about reading. You get to download from someone else's experience. You get to experience their mistakes without actually having to go through them, get some foresight. So when it comes to market profile, I would say you could start with what's his name's Jim Dalton. So James Dalton, Markets in Profile, or Markets in Profile, and what's his other book? Markets in Profile and one sec. Mind Over Markets. I don't know why I was trying to guess. I have a couple bookshelves above me right now. So Mind Over Markets, Markets in Profile. It's a good starting point. YouTube. Follow us along on YouTube and Twitter, and I talk a lot about it. And I talk a lot about it in our live streams. Getting dry eyes. And then if you want to have, a more in-depth, if you want to have some, I guess what I would call a more structured approach, then yeah, you take a course. We offer one. There's a few other guys in crypto that offer market profile course. Tommy and I can't think of the other guy too. Apparently, really great as well, right? I'm not going to sit and say, we're reinventing anything. When you are taking a course and you're using any kind of trading education, what you're really doing is hopefully you're getting involved with someone that is good at curating information, right? Hey, it's sort of like when you learn anything. Show me the shortcuts and show me the things, show me the right way to learn, but also show me what I could really just uh, maybe omit. Maybe what is really kind of at this point maybe obsolete. What do I need to know? What maybe is not as important? And I think that's what you get when you learn um, through some guided learning, right? When you take a course or when you're learning with somebody else versus just kind of throwing yourself out there and trying to learn on your own. Okay. Holy BTC, what's going on? Oh my God. Yeah, I'm not gonna act really surprised. The squeeze was setting up, man. Um, I There's a period in time after a break when I just say forget shorts. They're not forget it. You're fading. I just the best way to put this is you're fading a totally different level of participation, right? I'm a position trader. I'm a higher time frame trader. I'm not looking at the chart too much. I'm just considering the levels that haven't changed much over time, and I'm only interested when they change. And if I am a position trader and a swing trader, I'm probably considering a different allotment than a scalper would, where I'm approaching the market with a different amount of capital than a scalper would. A lot of the times due to scaling, right? You can't scale up scalping. You can to a certain degree, but at some point you become the market. Um, Not to say that there's really anyone that has a problem with, oh, you became the market in crypto, but just to, you have market impact, right? Everyone understands that. Hopefully everyone understands that. We'll go into that in a separate live stream. But at the point of a major break in market structure, there's just way too many eyes on the chart that are looking for the long. You have the shorts that are saying, I'm shorting, but I'm looking for the long. You have a market that is structurally geared towards taking that long. It's stupid to look for the short initially. And I go on these rants on Twitter, and I feel bad after because I feel like I'm hurting someone's feelings. But dude, it's stupid. You're losing money trying to what? Why are you so angry that you're trying to short Bitcoin all the time? The convexity is to the upside. You long your longs. There's convexity is also one of the reasons why technically if you're shorting Bitcoin, convexity is the reason why shorts don't get hurt as much when price moves against them as longs do, and that's just because Bitcoin margin futures, you have to deal with convexity at that point, because as the price of Bitcoin drops, you're changing the value of Bitcoin, or rather you're changing the value of each contract, right? That's just because it's unique, it's margined in the underlying. But the market right now is structurally everybody is geared towards the long side of things, or their approach is looking for the long. It's stupid to try to fade it right away, and you don't gain anything by doing it, right? You for a short, if you're increasing, for one, if you're taking a short position, you could only gain so much before you're actually opening up a short, just completely throwing risk management to the wind, because you're saying that if you're opening up a short, one, if you're not using any ridiculous leverage, the most you have to gain is 100%, right? I mean, you can't gain any more than that. Okay, if you are opening up a massive short, I think that it's kind of implying that you are, increasing. Let's say you're increasing your exposure on a short, that you have poor risk management to begin with. You're just overlooking all of these really important factors that are taking place, or these important considerations or important details that you should be considering to take a short. It doesn't make any sense. The long right now is like a gimme. It's like a t-ball game. Flag on a 5-minute time frame, long. That's like literally how I'm going to be approaching a trending market moving into this. Major break to the upside, flag, I'm just going to long it until it stops working. Because in my experience in the last 3.5 years in the crypto market, going back to October or November 2017, I'm just trying to think of when I first bought, because I came into crypto, but I didn't get Bitcoin. I didn't buy Bitcoin right away, obviously. I want to say end of October. I'll have to look at my I came on Coinbase, so I'll have to look at Coinbase to get an exact idea of when I first purchased BTC. My first interest was Litecoin because it moved around fastest between the exchanges. But in a bullish trend, I long dips that are there's nothing beautiful about them, honestly, guys. They're not special whatsoever. There's no like sophisticated approach to half of them. It's just long until you're wrong. And a lot of the times these are flagging so tight that maybe we're getting at this point we're getting really close to that. We're at that high, so it's kind of in the danger zone. But a lot of the times these are they flag so tight. So something like this, for example, you get a tight low you get an immediate low that's formed. This is on a 15-minute time frame. You could look on a 5. You get an immediate low that's formed. So let's just use this. It didn't really have much follow through. But you get a pullback, and a lot of the times what I'm going to be doing is longing that with a half-hour ATR as my stop. So it's called the average sub-period range size. But it's just think about it as a 30-minute ATR. And that's my stop, and that's it. And I'm longing. And I'm either longing on the pullback or I'm longing on a breakout buy. And I'm doing that over and over and just compounding that. Yes, managing a short. And so the one thing that's worth talking about also, how many times have I said the one thing? I feel like I've said the one thing like 30 times. Is that shorts they don't ever occur smoothly. Like you don't short and then just sail off into the sunset and like, I'm going to come back to my short and I just have to let it ride. You don't. A lot of the times with a breakdown, so let's say that, we're taking this backside entry to a short. Here's our consolidation. Price is taking the high. You get this breakdown and you're like, boom, I shorted at the market. Yeah, this is awesome. This is the beginning of a downtrend. What happens more than often than not? Consolidation at the low and you get this rip up. So are you telling me that you're shorting and constantly holding through these? I mean, you guys get the same feeling I do, right? Like that's not happening. I mean, you can't be approaching the market with you can't tell me that you're level-headed and you're approaching it correctly if you're saying you're holding through all those pullbacks. And it just strikes me as very odd. It doesn't strike me as realistic that the short side of things is worth prioritizing, because it's just there is no clean short, right? There's no clean short. It's almost over before it begins. You have to get in perfectly. And if you are not getting in on the breakdown, you're stepping in front of price. And again, you see what happens when people step in front of price. So I think that you can, to a degree, you have to be agnostic about direction, right? You have to be open to taking both sides. But I think as a whole, this market structurally favors the long side of things, okay? That simple. Okay. All right, so long till you're wrong. In a trend following market, yeah. Coffee is empty. Time for water. So this is my Nalgene bottle, and I try to drink one of these before midday. In the morning, I start with water because I think you have to have a glass of water first. I start with a little bit of lemon water. I throw a little bit of turmeric in there, a little bit of pepper because pepper, I guess, increases the bioavailability, or I guess the amount of turmeric that can be absorbed through the cell. I'm so out of the loop with that now. I used to know all that shit. But I start off with that and make sure that I drink the entire thing. If I don't have water in the morning, a coffee and an espresso, that stuff will perk me up, but it's down after that. Okay, guys. But I'm surprised you guys didn't ask for more alts. Or maybe this first coffee and crypto, I just kind of rambled on, man. Rambled on. Okay, so look at ETH. It's is it following BTC? It is. So good sign, right? ETH is going to, as I said, I'm a firm believer that whatever BTC does, Bitcoin is not going to be the percentage leader by gains, right? It's going to be ETH because it's the higher beta of the two. But what that means is the pullbacks, right? The downside capture is increased as well. It's not that this is coming for free. So you're thinking like, can you explain this to me, Ryan? You're telling me that although you're, not necessarily as confident in ETH right now, what you're saying is that you will be $4 from now, and that after that, you think that it's going to go further. Yes. The problem is the pain for ETH is also greater. So there's something called upside capture and downside capture. Fantastic investment would have the same amount of upside capture and a lesser amount of downside capture. Okay, so we would actually overperform in a downtrending market as well. With ETH, we see that this relationship works both ways. Okay, you get more upside, but guess what? If you're early, you get to ride more downside as well. So I'd rather be a little bit more choosy when it comes to that, because I think we're in a great position right now, and I'm not trying to stress myself out in this kind of market, because this is, you're approaching what looks like an easy market. An easy market is where you don't have to overthink things. And if you do overthink things, you look back at it and you go, damn, that was just, I just had to buy those retests of the 20-day moving average or whatever system that you stick to, because that's really the defining factor. You're sticking to this approach throughout. So high energy. Yeah. So what I didn't do this morning, because so I decided to schedule these streams on Mondays, Wednesdays, and Fridays, which is great, and we'll absolutely do that. But neglected to remember that this Monday I have my niece. So this morning, I'm up and my niece gets dropped off. I told you guys my brother-in-law and sister-in-law work in healthcare. Hopefully my brother-in-law will be giving me some LASIK soon. But so she gets dropped off. My wife takes her to school. It's great. I'm happy to be, what I'm really happy is, like, whenever I have kids, mom and dad we work from home. I've been working from home forever now. But not forever, obviously, but for the last 4 or 5 years. But what's it called? What was I saying? My niece comes over in the morning, so she has to get driven to school, which, it's like, I don't want to be, when my niece gets dropped off. She's 4 now. I don't want to be, like, stuck in work and not be, I want to be the coolest uncle possible, right? I got my niece's Bitcoin. So, and this was going back months, right? But thank God it was going back months, because it would cost me a lot of money to get a Bitcoin now. But I want to be present, so what that means, I didn't really write a bullet point setup for this stream. I wanted to touch on this PayPal news. I never got around to that. So these are going to be organized moving forward, where we'll have certain points that I want to hit, do the whole question and answer thing. And yeah, that's that. And PayPal, yes, granted New York's first conditional bit license to offer crypto currencies, services. Everything is lining up. It's great. I feel bad for anyone who faded these macro catalysts and thought that they knew more. So let's give away $100 in BTC, right? Let's give away $100 in BTC. Okay, what are we going to do? What's the trivia going to be to give away $100 in BTC? Okay, all right. Let's see. What is the name of my, so I have a few. What is the name of my favorite horse? First person to get it wins $100. I hope that I don't get flagged for singing the Jeopardy song. Okay. It might be a little bit of a lag. Nope. No, cantering is a there you go, Sigmar. Congratulations. Seabiscuit. No. No. Nope. It's Clark. Clark. Okay. So Sigmar, congratulations, man. You won $100 in BTC. And what you just have to do is send me your Bitcoin address. If you want to paste it here, Rio Silver, Trigger, Champ, Secretariat. Secretariat's an awesome horse. So if you want to actually go into one of my favorite horses outside of my own horses, or our horses, I should just say my wife's horses, because freaking her whole life, meaning her life revolves around the horses. But no, Clark is mine. But they're all mine either way, but you know what I'm saying. Everyone has favorites. But my wife's favorite is Journey, and then Simba. But so what was I saying? My favorite horse, I think one of the most awesome horses, and I shared this a while back. If you guys see me, I wear a Cornell hat. It's Cornell Ruffian Society. And, Ruffian is like a brute, but Ruffian is the name of a horse going back a couple decades ago, a while ago actually, that during its final race, before they had to put it down, it blew out its fetlocks and essentially tore its all the tendons in its foot during the race, and continued to run until it pulverized the bones in the bottom of its foot to powder. And it didn't stop running through to the finish line, and it collapsed at the finish line. And pretty incredible. I think horses are incredible animals. But Sigmar won the $100 in BTC, so go ahead and send me that. Go ahead and send me that BTC address. You could send it to me on Twitter, or you could send it to me on here. I'd say go ahead and send it to me on Twitter. So Karen Clark at Twitter. And that's that, guys. Everyone have a fantastic evening. I would say sorry to those that shorted early, but like I said, I said on Twitter, shorts, you have some time. And we're going on now. I think that was like 24 hours ago at this point. And you had time. And you didn't trust me. You didn't trust me. Shame on you. Okay. Everyone have a fantastic day. Sigmar, get me that BTC address, man. I'm going to send it to you right away.